Hey everyone, Coach Investor back to our video for today. So let's talk about Airbnb's earnings report. Airbnb is probably one of my favorite companies in my portfolio. Still trying to build up my position in that company since, well, the stock price never really went as low as I wanted. So I'm pretty happy to see that it is down around 8% at the time of making this video. And of course, some of you might say, why are you happy if it's down 8%? Was the report that bad? Well, actually, no, the report wasn't that bad. But then again, a report can be okay and the stock can still go down, as we've seen with PayPal, for example, because you have to take everything into consideration. If the stock price is too high, the anticipations are high as well. And so if they meet expectations, let's say for Outlook, because they met expectations and then some for this quarter, but Outlook was in line, maybe a bit weak-ish. And so if the price has run up a certain amount, then yes, sometimes you have that small correction. Now, of course, with PayPal, solid quarter as we've discussed, but to be honest, I don't think the minus 10% day was warranted, to be honest. But let's focus on Airbnb. Tremendous company, of course, still free cash flow positive by a lot. And as I said in the last quarter, I said they have plenty of cash. Let's see if they'll authorize a new repurchase program. And that's exactly what they have done. Now we're going to have a look at a couple of things that the CEO has said. Also, by the way, on Twitter, because I did think that what Airbnb was doing, what the CEO is doing on Twitter or social media's platform, probably others as well, is the correct thing to do. And Elon also agreed. Now, if you don't know what I'm talking about, basically on May 3rd, he tweeted out, Brian Chesky, the CEO, what else can we improve about Airbnb? We will prioritize your top suggestions. Well, guess what? 2 days later, here are the top suggestions. 1, lower cleaning fees, of course. 2, better search and filter. 3, verified listings. 4, better customer service. 5, guest loyalty program. I think this is very, very important, very crucial. I think this will be a no-brainer. 6, total price with taxes. This is something that's, let's be honest, only an American thing, right? Every time you go to the United States, you go and buy a coffee. It's like, oh, $4 or something like that. And then you go and pay. It's like, oh, sorry, it's $4.64. I'm like, come on. Can you not just include it in the price? Just don't understand this. Anyways, number 7, better review system, and 8, lower prices. Well, we all would love lower prices, and I agree that the ADR is pretty high. Now, another cool thing he did is, well, he opened up a weekend in June in his own personal guest room. Well, unfortunately, it was booked within 30 seconds. He will do this more and more. This is, to be honest, pretty awesome, but unfortunately, I think bots will take over this. So if you want a chance, maybe go ask ChatGPT to create a bot, and every time he tweets about something like this, you might be one of the first one to book a room with the CEO of Airbnb. Now, a quick comment here before we jump into the numbers. He says we had another record-setting Q1 with more than 120 million nights and experiences booked and accelerating supply growth around the world. By the way, this was the analyst's fears that, well, demand will overtake supply and this will create issues. But again, for a second quarter in a row, actually maybe even more, it's not the issue. We also saw 20% year-over-year revenue growth, and free cash flow for the quarter was $1.6 billion. And with over 50 new features and upgrades released last week, our service has never been better, and I think we can expect even more in the future. Because if we can continue here, of course, they talk about a couple of points here, making hosting mainstream, perfect the core service, but I want to focus on this here, which is something we touched on a long time ago, I think, since they went public. So expand beyond the core. We have some big ideas for where to take Airbnb next. This year, we're building the foundation for new products and services that we plan to launch in 2024 and beyond. At the same time, while Airbnb is in over 220 countries and regions, we're still underpenetrated in many markets. As a result, we've increased our focus and investments in less mature international markets and are seeing great results. Due to these efforts, Brazil and Germany have become 2 of our fastest growing markets, and we're excited to expand the playbook around the world. I think we saw triple-digit growth in those markets. Now, what can this mean? I always said that Airbnb should be able in the future to offer a full holiday package or full vacation package for family, friends, doesn't matter, which means from your door back to your door, all things will be done by Airbnb, or at least can be done through Airbnb's website. Flights, Uber, Lyft, taxis, hotels, you name it, boat, cruises, all of that should be able to be done through the Airbnb platform. That doesn't mean that everything should be owned by Airbnb or one of their hosts, no. But I think you should be able to incorporate a package like this. I think this will increase the value of the offering here. Of course, do share your thoughts down in the comments below. What do you think about this? Do you agree? Do you have other plans? Let me know down in the comments below. Are you a host, by the way? Would love to hear your experience. And if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. All right, so for Q1, nights and experience booked increased 19% year over year and 49% year over 4 years, so pre-pandemic, to 121.1 million. Then when you look at GBV, so gross booking value, that grew 19% year over year or 22% year over year on FX neutral basis, or 105% year over 4 year to just over $20 billion. Now, like I said, ADR or average daily rates, pretty high, $168 here, so flat compared to Q1 2022. Now, excluding the impact of FX, ADR in Q1 2023 increased 3% from Q1 in the same quarter last year. Now, of course, from a business standpoint, this is great. But from a customer experience standpoint, of course, if prices continue to go up and up and up and will become, in this case, more expensive than hotels, which offer you a full package sometime, it's going to be an issue in my opinion. But of course, as supply grows, you have a wider range of prices, and especially if you start offering just rooms and not a whole house, villa, etc. As for supply, active listing grew 18% year over year, in line with global demand and accelerating relative to Q4 2022, so that's great. As for the overall numbers here, revenue reached $1.8 billion, so yes, free cash flow is a very, very large part of revenue. It's $1.8 billion that grew 20% year over year or 117% on a year over 4 year basis. Net income gap, by the way, $117 million, big increase from 1 year ago and of course from 2019. Adjusted EBITDA, $262 million, also great improvements there. Now, when you look at net cash provided by operating activities, $1.6 billion, grew 32% year over year and 405% on a year over 4 year basis. As for free cash flow, $1.6 billion, 32% growth year over year or 471% on a year over 4 year basis. So yes, free cash flow, $1.6 billion, revenue, $1.8 billion. Now, a quick note here, they say in 2023, we have put forward the timing of marketing spend to be more heavily weighted in the first half of the year as compared to 2022. In addition, we are increasing our brand marketing investment in more countries around the world. We believe spending earlier in the year helps to support the peak summer travel season. We continue to see great results from our brand marketing and high return on investments in our performance marketing. Now, as for the outlook, actually before the cash and balance sheet, so at the end of this quarter, they had $10.6 billion of cash, cash equivalents, etc., etc. We also had $7.8 billion of funds held on behalf of guests as of March 31st, 2023. Well, that's a lot, to be honest. Is Airbnb becoming a bank? Let's create new headlines. Now, during Q3 2023, they repurchased $0.5 billion, so $500 million of common stock under the current authorization. The share repurchase program has enabled us to offset dilution from our employee stock program, and now they're announcing today a new share repurchase authorization of up to $2.5 billion of their Class A common stock. Now, as for outlook, we are looking forward to another strong summer travel season. We expect to deliver revenue of $2.35 billion to $2.45 billion in Q2 2023, which is about in line with expectations. This represents year-over-year growth of between 12 and 16%. Now, night and experience booked will have an unfavorable year-over-year comparison in Q2 2023 as we overlap pent-up 2022 demand following the COVID Omicron variant. Now, they also say here that nights and experience booked in Q2 2023 will be lower than the revenue growth during the quarter. So the growth for that segment will be lower than revenue. They also say they anticipate a slightly lower ADR in Q2 than the same quarter last year, driven by mix shift and the introduction of new host pricing tools as part of our 2023 summer release. Now, they also expect adjusted EBITDA to be similar to adjusted EBITDA in the same quarter last year on a nominal basis, but lower on a margin basis. Again, it's one of the reasons why probably the stock is down in after hours. This anticipated year-over-year decline in adjusted EBITDA margin is primarily driven by changes in the expected timing of our marketing spend relative to the prior year, as we've just discussed before. Lastly, they say we continue to anticipate a full-year adjusted EBITDA margin that is broadly in line with full-year 2022. Now, and as for the graph right now, we finished at $127. Currently, it's at $112 at the time of making this video. Would not surprise me if we go revisit where we were at the start of April, which is around $110 or so. And so that will be it for this video. Again, Airbnb, tremendous company, great management, great CEO, in my opinion, just a great future ahead of itself. Of course, the stock valuation wise was high, but if you look at the cash flow of this business, I mean, tremendous as a percentage of revenue, it's actually insane. Now, since they have a lot of cash, they generate a lot of cash, sometimes don't really need that much. What do? Well, they return more value to investors by buying back shares. Now, would I like to see the stock go even lower? Of course, I would, because I see that the business is operating the way it should. So I have no reason to be fearful right now. No, maybe sometimes I should be more greedy when others are fearful. So that's about it for this video. Of course, do share your thoughts down in the comments below. If you enjoyed this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.